Institutional framework for GER40 on the 1-hour time frame reveals precise structural intent as price approaches major overhead distribution. The prevailing market architecture is fundamentally bullish, characterized by an established sequence of higher highs and higher lows. Strong expansion emerged from the 25,300 to 25,600 matrix, driving the index beyond the 26,000 threshold. Current price action hovering near 26,434 reflects a localized reaccumulation phase rather than structural exhaustion, positioning smart money near primary supply boundaries. Primary institutional supply rests directly at 26,520 to 26,600. This is the critical decision threshold defining short-term delivery. Smart money footprint mapping indicates heavy buy-side liquidity resting directly above recent highs, making a liquidity sweep of this overhead pool highly probable before continuation or distribution manifests, forcing sudden algorithmic participation and aggressive institutional repositioning across the entire European marketplace, confirming maximum volatility ahead. Our focus is on this entry zone located at 26,180 to 26,280. We are waiting for mitigation here. Once price action confirms mitigation within this structural demand parameter, we can expect the expansion phase to resume, while alternative secondary institutional demand spans from 26,050 to 26,150 to offer deeper structural value if retracement extends. Our invalidation level is strictly set below 26,180 for the immediate bullish framework, featuring major structural invalidation anchored at the 25,300 to 25,400 institutional demand floor, where a break of this absolute boundary alters our structural bias entirely. For upside continuation following a confirmed break above the 26,550 to 26,600 distribution threshold, Scenario 1 targets T1 at 26,700, Scenario 2 targets T2 at 26,850, and Scenario 3 targets T3 at 27,000 plus, clearing higher time frame liquidity pools effectively. Conversely, if a sweep of supply at 26,520 to 26,600 experiences aggressive institutional rejection coupled with a structural break below 26,180, downside objectives activate to completely shift the immediate market delivery paradigm, initiating a powerful corrective cycle where smart money systematically targets lower imbalances and unmitigated levels, purging resting sell-side liquidity underneath previous impulsive legs. Scenario 1 targets T1 at 26,050, Scenario 2 targets T2 at 25,600. And Scenario 3 targets T3 at 25,300. Current pricing near 26,434 presents an unattractive risk-reward profile due to proximity to overhead supply. Prudent institutional execution dictates waiting for structural mitigation at demand or a confirmed high time frame candle close clearing supply before allocating capital. This is an educational video, not investment advice. Follow for more. The next analysis is coming very soon.